to TLC's short series on building loyalty and engagement in the financial service sector. At TLC, we're on a mission to create rewarding results for remarkable brands. We'll be exploring data-backed tactics to help you meaningfully connect with your customers. And today, I have our Chief Growth Officer, Jay, and Managing Director, Paul, who are here to break down what it looks like for financial service brands. Let's start with the hard-hitting truth. The average consumer doesn't see a big difference between banks or credit card offerings. Can you add some color to this? Why is this the case?
Yeah, there's a sea of sameness out there. And the result of that kind of sea of sameness is that less than a quarter of customers therefore feel emotionally connected to their bank. And it's really no surprise because all the products are the same, the rates are the same, the incentives for signing up are the same. When there's no difference in the product, you get that sea of sameness and you get really very low incentive therefore to switch banks. And so you see very low emotional engagement to both to their own bank as well as consideration of other players. And so what do you think, Paul?
No, I think that's exactly the opportunity.
Yeah.
I think any client that would come in and talk to us about that issue, I would say that's exactly where your opportunity is, because the sea of sameness that's out there, and maybe the current behavior, we're not seeing too many people switch.
Right.
But the truth of the matter is that more than half of consumers or card members out there, card holders, are more than willing to switch if the right offer or a good enough offer came across. And so what I would talk about is how we can help you differentiate your offering so that you can either, number one, make sure you're retaining your customers, or number two, grow your market share.
Yeah, makes sense.
Sounds like there's a massive opportunity and also a challenge for brands to tackle this. So what's the solution? Like, how do you stand out in the sea of sameness?
So I think part of the sea of sameness is caused by really transactional benefits, transactional rewards. I really like how we at TLC actually kind of think about this problem, which is brands are really good at thinking about the head, so putting rational benefits in, like high interest rates or great service. They're really good at thinking about the wallet, so do I give you some points or financial incentive for signing up? But what they really fail to do, I think, and it's not just banks, it's many industries do the same, is they forget about the heart. They need to emotionally engage with the consumer, so that more than the 25% you feel emotionally attached to their banks today, you want to get that number up, and the way to do that is through appealing to the heart, through kind of more enjoyable, more lifestyle type benefits that really are memorable. So you move away from that one-dimensional perk to something that's a memory maker.
Yeah, I think you talk about the heart and emotion. It's such a good buzzword that many marketers talk about. But in reality, why do we care about emotion? Is because the things that get you emotionally engaged are the things you remember most in your life, right? You're going to forget a commercial that you saw. You might remember that annoying jingle that they came up with. But if you can understand or show your customer that you understand what they're going through as an individual, and provide them benefits that are going to help them either day to day or be more convenient, and just drive home value in the things that they care about, where they spend their time, where they spend their money. They're gonna remember you because of that emotion that you've created.
Yep, very
so true. So clearly, reward element is super critical, and this is essentially what differentiates them in the market. But in the omnichannel age, how much does the experience across touchpoints actually matter? Because as we know, there's so many touchpoints.
Yeah, and I think brands are starting to try experiential rewards, but they're missing the mark a little bit, from my point of view at least. I'm kind of not thinking about all those touch points. And so I do think it's critical to think very holistically about the customer experience and make sure that that you are considering that the human interaction as well as the digital interaction are really creating the personality of your brand, and are creating that kind of emotional feeling if I have a good or bad experience. And I think it's something you've definitely seen as well, right?
Completely agree. You wouldn't invest a ton of money to understand your customer, know what they want, get them something that we know is going to drive them emotionally, engage with them, drive that lifetime value, and then serve it up in a really clunky way that's going to just start to drive them away and create a negative emotion, right? I think convenience and consistency in how you deliver those rewards is really important, and we talk often to our clients about what the best ways to bring these emotional rewards and experiences to life in their ecosystem and how that's important.
So just to recap, because there was a lot discussed here, but the 3 key things that we discussed that help brands stand out in the financial service sector are: 1, to deliver unique high-value experiences that go beyond the basics; 2, to make sure that every interaction feels special, personal, frictionless across all channels; and 3, remember that it's not just about credit card points, it's about creating emotional connections that people actually want to talk about and brands want to do but can't seem to find the connection. So it's all about relating to your consumer. Thanks for joining us today. We'll see you next week on episode 2 on how to successfully engage digital natives.